Vitale Wealth Management with this week's Great Investments Weekly Market Update. All information is gathered as of June the 3rd, 2024. Let's talk about what's happening in the week in review. Markets were largely down last week as the S&P, Dow Jones, and the international stocks were all in negative territory. The small cap stocks, which is the Russell 2000, was slightly positive, but have been laggards year to date. The U.S. Treasury rates diverged slightly last week as the 2-year rate slightly declined while the 10-year rate rose slightly. Overall, the U.S. bond aggregate was slightly positive for the week, but remains down year to date, which is why you see in our portfolios with the bonds still haven't really come up. Interest rates are still high, values are down. Upcoming economic releases, the U.S. unemployment situation report will be released this week. Investors will be looking to the jobs data for the indications and change of the trend. And jobs and wage growth have remained resilient in this economy, but any change in trajectory could have implications on the U.S., the Federal Reserve actions, and consumer spending. So they're watching that, which is why we still haven't seen interest rates come down, which, of course, if they do lower rates, it's going to be inflationary, and inflation still hasn't come down. Talk about the market outlook. The concentration of the S&P 500 continues to rise as the very largest, namely, continue to perform well. As of Monday, June the 3rd, the S&P largest 10 holdings were now over 30% of the index. While we don't see this as any harbinger of doom, our opinion is that these companies are going to have a significant impact on the index performance. The year-to-date performance of these stocks has also been marked by some of the weakness in other sectors and industries of the market. If these companies do begin to falter, it will require a much broader segment of the index to make up for any lost performance, because everybody's like, oh my gosh, the market is so growth. It's a lot of AI, it's a lot of tech right now. We've seen this before, so not every portfolio is doing what we want to see, but we have to hold true because some do good one year, some do good the other year. Talk about recent activity. The Tilt series models, a conservative, balanced, and moderate growth, added stable value and reduced fixed income total return allocation. Because the bonds, and we're not seeing that. The stable value has been paying 4.5%, so that's been a good add there. Stocks in the news, Ulta Beauty, which is in the G33, reported revenues and earnings that beat expectations. Dave Kimball, who's the chief executive officer, stated that their confidence in continued resilience of the beauty category, but guidance was reduced to adjust the dynamic for the dynamic consumer environment. Also, Salesforce, which is owned in the Core Select portfolio, reported earnings that beat expectations, but sales were below expectations. The company stated that budget scrutiny and longer sales cycles led to the guide below consensus estimates for the following quarter. So we are still seeing some really good revenues for the companies. We are seeing growth. Everybody's like, well, Joe, how long can this market go? How much higher can we go? As long as we keep seeing revenues and the companies are still making money, they're still going to be increasing. However, if they're not meeting their forecast or they start to decline, that's when we start to see things really start to pull back. When we start seeing spending pull back as well. And we're also looking at the economic data. Whenever we see the jobs reports or if we see the inflation, that does have a huge impact on the market. Most important thing is stay the course, right? Make sure that we have cash on hand, good reoccurring revenue coming in, safe money, buckets of money, and we can get a safe guaranteed 5.5% right now, we know. So now's a good time to revisit those that aren't performing very well and make sure that we're going in the right direction and keep properly allocated. So that's it for this week. Hope you're enjoying the summer now that we're in June, so God bless you. We look forward to seeing you again next week.